Hello, traders. It's Wednesday, June 21st. Hard to imagine how much of the month is already flying by. We had an exchange holiday on Monday. That's when I recorded my last video. We're going to review that pick. Then we're going to take a look at what the market's currently doing, and then we're going to find a new pick. I am going to zoom in on the market very quickly here, and I like what I see here. I think we're going to get a market bounce. We'll get into that a little bit later. So let's keep an eye on this in the right corner here. I like the support level that's being established. This is where I would be looking to take some longs, and I'll tell you why in just a second. SPOT, spot. Run, spot, run. Well, spot is not running. This was my long pick from Monday when the exchange was closed, and I liked the breakout that I saw on a D1 basis, but the stock has been super choppy. Stair step pattern higher. This is a nice upward sloping trend line, but we can see you've got these long green candles and then a long red candle. So every nice move like this retraces. Well, we expected that with this nice long green candle as well, and that's why I suggested a strategy where we buy dips. We wait for one OSI to drop below zero, and then when it pokes back above zero, this would be our entry point. And I suggested doing that on a 5-minute basis, and I told you I'm going to review the stock, and we're going to see how it would have performed if we used that strategy. We recently launched some new alerts, and we're able to set these alerts in exactly this fashion. So yesterday, stock gaps lower with the market. And you can see how it quickly tried to fill this gap, but it was still trending below zero, meaning that it had relative weakness. Here, it finally starts to rally above zero and it starts gaining some relative strength. So this would have been your entry point. Today, we only had one tiny little entry point, and given what the market's doing, I would not have taken this trade, but you could have, and you would have done okay, poking right above zero here. Now, we'll take a look at the stock and why I would not have entered here. You can see how instantly it went right back below to relative weakness in here. So when you've got a stock that's gapping up like this, and then instantly the stock reverses, that is a warning sign. It tells you that the stock has some sellers. Long red candle. This is a bearish engulfing candle. This is a warning sign to stay away. The market also gapped down and it continued to drift lower. There is no reason to be taking long positions. And you can see how the stock is very choppy. We've already seen that on a daily chart, that there is a longer term directional trend, but within that trend, it's a stair step process. 2 steps forward, 1 step backwards. Well, that's what we're currently seeing. I believe that the market's going to find support, and I think that spot is going to continue to work in exactly the same fashion, along with many other stocks. You've got to buy these dips. Then, when you get that nice release and that nice rally in the stock, that's your time to sell out of the position. So buy weakness and then sell into strength. Take a look at the market, see what it's currently doing. You can see that we added a feature. This is the VWAP, and we have a 1 standard deviation move above and below. And you can see how when the VWAP gets down to that 1 standard deviation mark, it typically is going to find some support, and often it will challenge the upper part of that standard deviation. Lots of price compression in here, and that's why you see this standard deviation compressing. So you get your release, and it actually releases above the 1 standard deviation move. This is very lackluster trading on extremely low volume, and that's what we really have to be cautious about right now. So we had lots of news last week. We had the FOMC statement, we had economic releases, CPI, PPI. That was the big news because everybody's watching inflation. What the heck is inflation doing and what the heck is the Fed doing? We also had triple witching last week, so that also led to a lot of action as These large institutions are rolling their positions when the futures contracts expire. With all of that behind us, what do we have to trade off of right now? A whole lot of nothing. There's housing starts this week. There really is not a lot going on next week either in terms of economic releases. The jobs report is going to be released on July 7th. So we've got a lot of time to wait. What I believe is going to happen is we're going to see a lot of lackluster trading over the course of the next 10 days or so because there's no news to drive the market. The market's constantly looking for that next catalyst, that next news event, and there aren't any. We've had a nice little breakout on the S&P through resistance, and you can see this horizontal resistance line here. Let me take off the VWAP so that we can see that more clearly. And so you've got a nice horizontal resistance level that was broken out to the upside, and more importantly, we had follow through, and we had follow through on decent volume. Those are all really important elements that legitimize this breakout. Well, we've got this long green candle here, and now we are reversing that candle. So this could be a little bit of a buying climax. This was last Thursday's price action, much of it influenced by triple witching. So these are kind of fluffy programmatic gains, if you will. Once the momentum's established, these guys are rolling positions from June into September, and they will kind of feed on that and they'll exacerbate that move. Well, given that it's kind of fluffy and that we've had a decent run recently, we're seeing a little bit of a pullback. The market is in that same type of mode, 2 steps forward, 1 step backwards. So given that we've got pretty bullish market context in the backdrop, here's what I'm looking for. I'm looking to buy dips, be it on a day trading basis or a swing trading basis. I don't believe that these buyers right in here are going to be deterred. Why or why not? Well, we had a relatively hawkish Fed, and they basically said, listen, folks, we think that we're going to have 2 more rate hikes this year. The majority of the voting members believe that there is going to be 2 more rate hikes this year. The market's looking for a possible rate cut in Q4. That's not going to happen. That news was a splash of cold water to tell investors, whoa, wait a minute here. You guys are way too optimistic as far as the Fed's policy. So that would have normally resulted in a nice little drop, but it didn't. In fact, the market pushed higher. I believe that right now, investors, asset managers are not as concerned with the here and now. Okay, yeah, we got 2 more rate hikes, 25 basis points, but the Fed's very close to ending their tightening cycle because inflation is starting to finally come in, and that's what they're focused on. So we're not going to have back to back to back 75 basis point rate hikes anymore. No, they're pretty close to finishing their tightening. And that being the focus and them looking a year out, they feel that earnings have been decent, economic growth has been decent. The issues as far as regional banks and a potential credit crisis, they haven't seen anything else in the last few months. So they're taking some confidence in that. And VIX is really starting to plunge. So if we take a look at VXX, for instance, you can see that option premiums have been in a very steady decline. This means that there is not a lot of uncertainty in the marketplace, and that in general, these large institutions feel that uncertainty is coming out of the market. Well, how can it be coming out of the market when we still have a Fed that's tightening? Well, the Fed has pretty much thrown everything they could at inflation, and the market has not crashed. The economic activity has not crashed. It's still fairly decent. So that means that risk on money is going into the market, and we can see that in IWM, which is small cap stocks. And you can see how they've been able to actually break out from the low. We're also seeing some rotation into cyclical stocks. So again, that's risk on. So given the picture that I've just painted to you, 2 steps forwards, 1 step backwards, we need to use that price action when we devise our game plan. And so that means that you do not chase breakouts for the market. You wait for those dips and you wait for those pullbacks. That's when you enter. And then when you get these nice moves higher, that's when you start taking some of your gains and you wait for the next dip. And that's when you start waiting for those signs of support. Once you see them, buyers should return. They're doing the same thing. The big money's doing the same thing. They're not chasing the market up here when forward PEs are at 18 or 28 for the QQQ. They're saying, listen, we like putting money into the market here. We feel relatively safe and that the bottom's not going to drop out of the market here. So when we get these pullbacks, that's when we're going to be allocating money, and then we get the next leg higher. So that's the mode that we're in right now. And I suggest to you setting these alerts and trying to time these pullbacks. So let's see if we can find a stock. And we also know that the market action should be fairly light over the next couple of weeks or so. So I would be more inclined as a trader to simply wait for those drops, wait for the bid to be established, and then to focus on longs. Yes, you can hang some of those, hold on to some of those swing trades for a day or 2 or 3, but don't expect any big explosive moves over the course of the next 10 days. It's going to be very lackluster. The other thing that I wanted to mention about that 4th of July holiday is that it comes in Tuesday. Well, why should that matter? Well, it matters because it's going to take Monday's activity out along with it, because Tuesday's a national holiday. Many traders and many workers are going to be taking Monday off as well. So all of a sudden, this is not a 3-day weekend. This is really a 4-day weekend. And the next FOMC statement, the next meeting, is at the very end of July. So we've got some time for the Fed to evaluate conditions, and the market shouldn't be too spooked by higher interest rates until we start getting in toward the back half of July, which is also when earnings season starts. So your main takeaway from my comments this morning is that we're in a dead spot for the next 10 days or so. Buy dips, take profits on rips. I don't believe that these buyers in here are going to sit back and wait for the market to come in. I believe in the next day, perhaps today, perhaps in the next 2 days, we're going to see that bid return, and then we're going to start to see a little bit of volume as the market comes back up and challenges this high. Now, here's what I don't want for that thesis to hold true. We have got to hang on to this long green bar. We want to close above the open right here. We certainly want to preserve this horizontal support level here, and that low comes into play around 433.60 or so. So we don't want to pull back too far from the high. We'll pull back, test, 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 test. Now we start forming support. Now we start floating back higher again. That's what I'd be looking for. If instead something comes out of left field, very unlikely, and we see a long red candle right through this, closing on its low with heavy volume, okay, something has spooked the market. There's something going on. I'm not looking for any type of event like that. There certainly is nothing scheduled that would lead me to believe that there is a speed bump ahead. So, given that information, I'm looking to buy this dip. So let's go in, take a look at some stocks. I'm going to go into a couple of searches, going to keep this relatively short since I just did a video recently. One of the nice features that we've added to Option Stalker Pro is the ability to add variables to the columns. And so I have volume on a 5-minute basis, 15-minute basis, daily basis, and we gauge how today's volume stacks up to the average volume for those time frames. I've also added buy and sell signals on a 5-minute, 15-minute, and daily basis. And I've added strength versus the S&P 500 on all time frames, 5 minutes up to daily. So it makes it really easy for me to have another way to visually identify strong stocks instead of having to flip through all of our searches, which are already pointing out some of the best stocks to be trading. Now I can also take a look and go right across all the columns and look for blue, 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 green across the board. DLTR looks really good. Let's put up the major moving averages on a daily chart, and then we can see where they come into play. It's been able to get above the 100-day, well, the 100-day moving average is here. This is the 20-day moving average, but you can see how the stock is now in the gap, starting to hit a little bit of resistance at the 100-day and 200-day moving average. You can see that wick right here. So that's going to be a natural resistance level, but there's a chance for it to start filling in more of this gap, particularly if it can get through that 100-day and 200-day moving average. I like it. I'm not a huge fan of buying stocks that have that type of negative reaction. I need to see a little bit more of a base forming here, but it is in the gap and it's probably going to continue to fill more of that gap. So we'll continue to take a look and find other stocks that might be of interest to us. I'm going to go into green royal flush. Looky here, we got JPM with some nice green dots across the board. See that major horizontal resistance right here? It's trying to break through it. Is this enough for me to want to trade the stock? No, but it's the largest bank, so I should pay attention to that. XLF should be doing pretty well. It also tells me that some of the uncertainty in the banking sector is probably starting to wane a little bit, and that's good for the market overall. But very choppy, chunky price action back and forth. No momentum. It's very typical for financial stocks. These are the epitome of making sure that you buy dips and that you do not buy breakouts intraday. This resistance tells me that the stock's got some work to do to get through that level, so it would not be of great interest to me. This I like. This is different. This is, yes, the stock is rallying quite a bit. This is a compression breakout. See how compressed the price action is? The longer and tighter the compression, the bigger and more sustained the breakout. In this particular case, we have Mara. You can see that beautiful breakout right in here and big follow through today on heavy volume. Let's look at the M5 chart. And this is a classic example. So you come in and you go, hey, Mara looked fantastic yesterday. Man, look at that rally in the stock on heavy volume. Institutions are in here. How do you know? Because the volume is heavy and the price action is telling us that the stock never gets a chance to reverse or retrace, because for every profit taker, buy, 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 there is no profit taking because there are many more buyers than sellers. So the stock just continues to float higher. And then today, bam, here we go again on really big volume. Well, when the market is dull and it's not doing a dang thing, then you better find stocks that have heavy volume, because the stock is going to have to do all of the heavy lifting. So you come in at the start of the day and you go, hey, this could be really nice. But Pete told me, don't be the fool that chases the high of the day. So I'm going to set my alert and I'll wait for one OSI to be less than 0. And then I'll wait for it to be greater than 0. Hey, I just got an alert. Gee, that was a nice entry point on a very strong stock. You'd have another entry point right here. Now, I still didn't like what the market was doing this morning. It was floundering around, so I would not have aggressively bought Mara. Do you remember what I told you 10 minutes ago, 15 minutes ago? We had this bar right here off of the low, and I said, I like the market here. We had a bullish 10P cross, multiple support, tails under body, downward sloping trend line, broken to the upside. We can put up the AV WAP as well, or we'll just use the VWAP in this particular instance. And you can see where that comes into play. And look, we went from the lower one standard deviation move to above the one standard deviation move. And I told members in the chat room just before I started the video, folks, we saw a pullback yesterday. We're able to find support. Buyers are eventually going to come back. I like this level. I like the fact that we have a bullish 10P cross. I like the fact that we've been able to establish support here. I would like to see better volume, but right here, this was a tell. Where did that volume come in? Came in right here on that little bounce. And I noticed it. I was like, I think this is going to be a decent little support level. So we pull back one more time, and now we're going. You could see this bullish 10P cross came right in here. So this cycle that we had from here to here, here to here, that was a bearish cycle. Didn't produce anything. Didn't produce any long red candles or a new low of the day. So we call that a benign cycle. What I wanted to see out of this bullish cycle is for us to take out the high of the day, and I'd even like to get into this gap. If we can accomplish that right now on this bullish cycle, that tells me that buyers are interested and that I can stick with the long side and trade the long side with confidence. Anything less, so we stall out right here and the bullish cycle runs, then I'm kind of in a mode where, you know what, this is just chop back and forth. Still want to favor the long side, but instead of looking for any kind of decent move back up to the open today, it's less likely to happen because it has to happen now. I need to see signs that buyers are truly, not just passively, truly interested at this level. So if I don't have that, I don't have any other news or anything else to move the market. We've got some Fed speak going on right now. Typically, I'm very aware of what they have to say, but we know that more members are hawkish than dovish. And we just got the FOMC statement last week. So I'm not expecting any huge news. If anything, it's just going to be a constant splash of cold water every time they open their mouth. So, yes, the market's got to be able to navigate that. But in any event, I like what I see. This is when I would want to be buying a stock like Mara. Mara is going to be your pick of the day. Let's see if we can find another one. PBR. We've got nice green dots across the board. Look at that price action. This is an energy company. The energy sector's actually been pretty strong. And look at it power to a new high. Now, given that energy stocks in general have been soft, PBR's got to have something else going on with it here. Perhaps it's a new oil find or something to produce this type of a move. Now, CVX and XOM are integrated, but this gives you an idea of what the energy sector has been doing. And I'll put up XOM and then I'll put up XLE. There's XOM, XLE. The takeaway is something unique is happening with PBR. We can also see for XLE, the energy ETF, that this was a breakdown below a 20-day moving average yesterday, and this is a bullish engulfing candle today. So for today, energy stocks are doing well, and PBR is one of the strongest in the group. So yes, it would certainly be on my radar. So what would I do with this information? Well, you know my tactic, and it almost got below zero here. And that would have been a beautiful entry point. So we just missed it, but right click, create alert, strong versus SPY. Currently the condition is true, so I need it to go false and then true. Save it. Now it's working. This little line dips below zero. Stock pulls back a little bit, crosses back above zero, I'll get my entry point probably in here, and then I can ride the stock higher. There's no cost to setting alerts. You saw it took me about 3 seconds to set that alert. If I see the alert go off, and in the meantime, long red candle, long red candle, long red candle, and then it starts kind of poking its head up a little bit and I get that alert, I'm not going to buy that. Now I know there's sellers with these two long red candles. If on the other hand, the stock just starts digesting some of the gains and it's just barely pulled back to maybe the VWAP for most stocks, and it's just kind of sitting there. Well, that nice little pullback tells me it's just a pause, and that yes, when the stock regains its relative strength, it's still going to be a good trade. So I'm in complete control by setting alerts. I'm not eating up my margin. I have no emotional attachment to the stock because I don't have a position. I'm simply waiting for those alerts and then I'm reevaluating the stock. That's how we're trading right now. The members that have been able to use these alerts are doing really well. It also takes FOMO out of the picture. So if you come into the start of the day, just like I'd shown you on Mara, and there are many other stocks like this, Mara, it happens to be particularly strong, but if you were in here, buy, 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 oh my God, it's going to the moon. Look at that long green candle. Then the bottom falls out. Here we go again. And Mara happens to be strong, but oftentimes you'll see the bottom really fall out. Hey, I have a great example of that. Ooh, 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 ooh. Pete told me he likes spot. Oh, oh, oh. New high of the day. I got to have some. Whoa. Whoa. Uh-oh. Oh, I'm going to sell out of this. Pete sucks. What a horrible pick. That's FOMO. You need to reverse that. Right now, the market does not have much in the way of momentum. Sure, it's got some buyers, but you have to buy the dip. So instead, right here, you're going, hey, this is a nice entry point. Pete told me to set these alerts, set the alert right here, that long green candle. Okay, I could try it here. It's starting to regain some of its relative strength. And then you ride the stock higher. Now, I still am not crazy about a huge pullback like that, so I probably wouldn't be trading spot. I'd be finding something else like PBR or a handful of other stocks. I've shown you how easy it is to find these. So PBR, Mara, let's take a look and see if we can find anything else real quick. Let's go into maybe Pop Bull, see what we got coming up there. Lots of candidates here, so we can filter some of them out, but we don't have to. LPX, that's a stock that I showed in the chat room. That's a stock that I have an alert set on. Another great example, nice, tight price action. Go to the D1 chart. Really nice looking stock. Love this horizontal breakout right here. Decent volume on this breakout. Good relative strength. Yes, this stock has everything. Let's see if any of the trend lines come into play. And there you can see, gee, I wonder if that's a valid trend line. Well, that's right where the stock got today, and that's the high of the day. I would say, yes, these are valid trend lines. So that's where you'd want to set your target profits up there. Now the stock is starting to pull back a little bit. So if I can buy a dip and sell it back up at that high, I'd be interested. So you go into the 5-minute chart, you right click, you set your alert. I'm going to get an alert when this stock regains its relative strength, and then I'll be able to evaluate what it's done relative to the market. And if the long red candles start stacking up, then I'm going to know I want to avoid this for a while longer. Maybe I reset that alert. Maybe I set a downward sloping trend line at the high here so that the stock can continue to come in. And when that trend line is breached, I will be notified. Click end of day, click on the top of that candle, click on the top of that candle, and then my alert is set. So now, if the stock starts to regain its momentum, I'm going to get this alert. I can set a horizontal alert keying off of that candle as well. So I'll show you how you do that. Double click on it. Now I have another alert set there. It's on my radar. I have no position. I have no capital tied up in it. I'm simply getting these alerts so that I can constantly evaluate the price action. That's how we do it. So we've got a few stocks already that we're looking at. Do you see how easy this is? Great volume. I have to have good volume, okay? Very important. This looks like it's pulling back a little bit because we've got relative weakness on a 5-minute basis, but we're good everywhere else across the board. And this information refreshes continuously. So that looks okay. Let's take a look at that stock, PCT, see what it's doing. You definitely want the open here to hold. That's a pretty substantial pullback from the high when the market was running higher. So not too crazy about this one. Not even going to go into the daily chart on it. ABR, this is nice. Gaps up, preserves all the gap up. Now it's been compressing, consolidating those gains. Let's take a look at the daily chart on it. Oh yeah, nice. It's got some room up to that trend line. This all looks good. Bounces off of the major moving averages. It's going with big volume. Had a little bit of relative weakness, but that's going to reverse quickly given the price action today. So going to the 5-minute chart, this is another easy one. Going to set the alert. Going to use SPY. This one I might want to go with a longer time frame because we can see that the stock is just about to cross here. And I can't even tell visually. It looks like one OSI is greater than 0. So I'm going to set this and I'm going to say, okay, we'll add this. Has to go false, then true. We'll save it. But yeah, this might be a pretty good entry point right here because you can see how it dipped just below it and then it poked right back above it and it's been able to preserve its volume. So yeah, I'd kind of be looking to just buy it right here because we happen to be on it. Right time, right place. If you saw this type of price action early in the day and you want to keep flipping and you want to keep looking, that's when you set the alert. And right now, is when I would be getting that alert, probably about 10 minutes ago or so, right in here. See how easy? That's how we do it. I still like the long side until I see something really nasty happening on a D1 chart, until I see that long red candle, heavy volume, and a decent pullback. I'm going to operate under the assumption that the market is simply digesting some of these gains, that it is going to regain its footing, and that any dip in here is going to be a buying opportunity. So that's my mindset right now. I'm looking long side only. Want a day trade from the long side? I'm more inclined to buy dips than I am to buy breakouts as the market continues to go higher. You can swing a little bit in here as well, knowing that the rug is not going to get pulled out from underneath you. But the ideal setup for any kind of swing trading is still to keep it short term, wait for these market pullbacks, wait for that support, and then when you have that ingredient, you've got the market going to push back up to the high, so you'll have a market tailwind, and you're in super strong stocks that have longer term technical breakouts on volume with relative strength. And there's your LPX. That's what the alerts look like when they pop up. And that was an alert line that was just triggered. That downward sloping alert line that I dropped was just triggered to the upside. But that's what the alerts look like if you're getting an alert that's created by an indicator or if you've manually drawn those alert lines. That's all I've got for you today. I'm going to be doing a video Sunday evening. We're going to be highlighting a new pick. We're going to be taking a look at how our pick for today, Mara, has fared. I also like this LPX trade. I like that ABR trade as well. And then we're going to take a look at what the week ahead has in store for us, but expect fairly light volume. CSGP, strong versus SPY, M5 basis. Let's see the chart. Yes, this is an alert that I set earlier. This is exactly how they work. So I come in early in the day, I look at the D1, I look at the M5, and I go, hey, this is a pretty nice looking stock. Look at all those downward sloping trend lines that have been breached to the upside. Look at that volume, relative strength. Looks great. What's the 5-minute chart look like? Looks great, but I want to buy a dip. So I'm going to set an alert, and now I just got my alert. And the pullback was minor, and we're breaking out to a new high, and it's been able to preserve its volume. This is a good trade. Thanks so much for watching, everybody. Please leave some comments. Are you guys even watching this? Let me know you're watching. Let me know you're enjoying the content. Let me know what you'd like to see in the videos. When I don't see any comments, I get a little bit discouraged and I'm not as motivated to do the videos. So please do that. Keep my spirits up, and I'll keep putting out videos. Thanks so much. Good luck with your trading.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.